Not going to be long. All right, thank you. So I'm going to call to order the Gray Sauble Conservation Authority special meeting of Thursday, December 5th, 2024. Call to order, we acknowledge, and I will start with, sorry, the acknowledgements. We acknowledge with respect the history, spirituality, and culture of the Anishinaabe, the people of the Three Fires known as Ojibwe, Odawa, and Potawatomi Nation, who have inhabited this land from time immemorial, and further give thanks to the Chippewas of Saugeen and the Chippewas of Nawash, now known as the Saugeen Ojibwe Nation, as the traditional keepers of this land. We also recognize the Métis whose ancestors shared this land and these waters. May we all, as treaty people, live with respect on this land and live in peace and friendship with all its diverse peoples. Are there any disclosures of pecuniary interest? Seeing none, any call for additional agenda items? And seeing none. So the adoption of the agenda, I'll move that the Gray Sauble Conservation Authority Board of Directors approve the agenda of December 5th, 2024. Over to seconder, please.
I so move.
John, with gusto, I mean, seconder, please. With less, but Scott, all in favor? Carried. So moving on to the business items, the only business item we have today, the portfolio update. The resolution is obviously in your agenda package. Now I'll turn it over to Tim for discussion. I won't move it first, so we'll have the discussion.
Thank you. Yeah, as you'll notice from the board package and the staff report, the recommendation is open-ended for the board to be able to fill in as they see fit. So a little bit of background. It's only been a week, so I think we all recall, but staff had direction from the board to move $500,000 from our investment portfolio into our high interest savings account. And Allison and I met with Mike Konopka from TD on Friday of last week and instructed Mike to do that. My understanding is that that has happened now. We also had direction from the board to discuss with Mike what to do with the remainder of those investment funds, which is about $1.1 million or so, and whether it makes sense to pull them all out, put them in the high interest savings account, or pull them out and put it into a fixed asset like GIC or bonds. So we had that discussion with Mike, and then Mike went away and dug up the same 10-year period. So our investment started in 2015. Mike found GIC rates over period from 2014 on that, so the 10-year period. And what we see there is that if we had been invested in GICs instead of being invested in a diversified portfolio, including equities, we would have netted 3.36% earnings over that 10-year period. Our current portfolio sits at 4.38, so about almost exactly 1% higher. We do note from talking to Mike a couple of things. Like when we look at our portfolio, we had some really stellar years, but we had a couple of bad years. And I don't think that's just our holdings. I think following COVID, the market dipped. In 2022, the market dipped. So these things happen, and that's why our investments are there for the long term generally. The desire to pull the 500 now revolves around we actually need that money in the very near future, and we don't want to see the market dip right before we're about to draw money out of our investments. One other thing, and this is all in the staff report too, but one other thing that we note is that our current ratio is about 40% fixed assets and 60% is a combination of cash holdings and equities. And that's the ratio that the board had set as a risk tolerance threshold through a previous survey of the board to see where we want to set that. And so in talking to Mike and in the information that he provided us afterwards, it actually suggests that some of the losses that we've taken are actually related to that 40 or 50% of our holdings that are in the fixed asset class. So they performed very poorly in 2021 and 2022, offering a negative return. And that if we hadn't had those, our total holdings, our total earnings might have been even higher. But what we do see is that over the last 12-month period, we've had over 20% earnings on our portfolio, and that's 4.57% in the last 5 years, 4.38% in the last since inception. But what we are seeing is the market is slowing down a little bit. But that 20%, it was 19% in Q3, so it's still good. Anyway, so what we have for the board, based on the direction that you've given us to dig into this a little bit more and provide you with some more detail, I hope this is enough detail for the board, and I see three potential options. One is to leave the investment as it stands for the long term and let it ride the ups and downs of the market and continue to earn revenues on it. One is to retake the risk tolerance survey and see what that ratio looks like in the future. Is it, because like I said, right now it's a roughly 60% equities, 40% fixed assets. Or a third would be if the board wants us to pull the whole thing out and put it in to a fixed asset class or into our high interest savings account. What I would note is that when interest rates go down, which they're doing right now, those fixed asset classes and the high interest savings account will both be expected to earn lower revenues. I think so. Thank you, Mr. Chair.
Open it up to the board.
We through the chair, we talk about the long-term horizon. Do we know what additional portion of those holdings? And sorry, I've seen this number before perhaps, but it's out of my head at the moment. We pulled the 500,000. With our immediate needs over the next year and a half, do we know what additional percentage of that we're going to be drawing out to fund our large capital expenditure? Or do we think that the majority of that is still on a 10-year horizon?
I think that we have the money in cash that we need for the commitment that we said we would make from our reserves. So we have a little over $600,000 in the high interest savings account now.
High interest savings account will be around 5,600, yeah. And then the bank account has almost that.
Right.
Which is entirely separate from the one.
But still part of our reserve holdings. So we don't expect to have to draw any more for the building from the part that's invested in our portfolio.
Anyone else? So in discussions with the advisor, I mean, my only concern about this, I don't really have a problem leaving it there because long-term is normally the best. And you're right, interest rates are dropping and that's going to be a bit of a concern about losing there. My only concern is the next 4 years in a certain country south of us could vastly impact what's going to happen in our economy. And nobody knows what that's going to look like. So did he even touch on that? And what was his thoughts if that kind of went south because of that?
So yeah, we did talk to our portfolio manager about that. And he stated that he and his team don't time the market, so they don't make those types of moves within the market. And so they're not planning for any of their clients, unless being directed to do so, to make those types of moves. They just figure sometimes the market goes down and then it comes back up, and the long-term investment, you ride it out. Okay. But certainly at a staff level, we had concern with money that we're immediately about to use.
Right.
That whether it's going to happen or not, that we didn't want to take that risk.
Yeah.
If we were to recalibrate or reassess our risk tolerance as a board, is there a particular cost or time frame to that choice?
Yeah, I don't believe so. The questionnaire is a 2-page survey, and there's just a number of questions that not sure how beneficial it would be to do it as a group, just because everybody has a different, maybe a kind of form to do the survey. And it's certainly something that probably would be to do.
I know, like typically my investment advisor wants to see that annually. Like, I don't know what about other people's, but I think it would be worthwhile if we haven't done that review in the last few years, that we should, however, go about doing that. I think as a board, if we've got the funds that we need today, after doing that move for the building, I guess my question is like, what are the next big potential capital outlays where we may need that reserve? Because I know we've got the management plans with lots of capital projects identified, but it would be helpful for kind of like like the next 5 years, right? What are the big ones that we're looking at where we need
Yeah.
that?
I don't have those answers right in front of me,
Yeah.
but we do have an asset management plan that looks at a rolling 10-year period. I think what we need to do is recalibrate that a little bit with an understanding of the earnings that we're seeing from the parking revenue, which are different than the earnings that we were seeing from that revenue when we created the asset management
Right.
plan, right? So, but certainly there's a substantial amount of capital need. But it's not to say that it can't be calibrated such that what we're taking in a year is equivalent, but I don't have that answer.
So just out of curiosity, what was the advisor's reaction on hearing that we wanted to pull 500,000 out? Was that kind of a good or a bad or?
I think he was expecting.
He was,
Was he?
I had been in communication with him along and just giving him periodic updates to where we were with the architects. So. Maybe not much at once, might have been a little bit of a surprise for him, but. Yeah, we did know it's we're looking at significant.
Okay, I guess I was just wondering if he reacted saying, oh, that's a bad move for you to make it this time or that type of thing, but no, okay.
Did you have anything you want to put in?
No, I just have just one question. Conservation Authority is not required the events to do a 10-year capital asset management plan to which you have to contribute every year.
No, we're not.
Oh, okay, all right. And do I understand that you're in the investment firm that we use, I can't remember what it is not required by law to review with us annually our portfolio and make changes if required?
We do review with Mike each year when he comes to the board. He gives the board an update.
Oh, okay.
I don't believe the questionnaire is a yearly. It's not a yearly thing. It hasn't been. Whether the board chooses to make it a yearly. I'm sure fine with our portfolio manager, but we have not opted to do that up to this point.
Okay. It was a requirement, the investment to ensure that they meet with their clients a year to review their portfolio. At least that's what
Oh, yeah, and
my guy said.
when he comes to the board each year to go over the portfolio.
Right, okay, that was my confusion. But
Thanks, Kathy.
And just to clarify there, where his reviewing it with us is different than
I think we
recalibrating
lost
our risk
Kathy.
assessment.
Right, we get
yeah,
a report annually.
sure.
Oh,
Oh,
No, she's getting a
she's
phone.
here. They're supposed to call.
Okay.
Scott?
You can go Tim first.
yes, so sorry to answer Member Farmer's question about is that different than reviewing the risk portfolio? Yes, the stance that we've had essentially from our account manager is, and that we've taken is unless the board is asking for a change in that risk, that it's staying the same. And so right now I'd say it's a medium risk with 60% in equities. And so I think I'll sort of be better to answer this and jump in certainly, but I think the idea from the board there is that a medium level of risk would allow us room for growth. And with the understanding that we can lose sometimes too, but certainly we've seen growth long term.
Yes, Scott.
I will just put a motion out there first that we leave the balance status quo at this time. If the board wishes to, if you want to make more money, then you could flow more from the ESG investing arm that we've done. But we decided several years ago that that was an important value to us, and we migrated more percentage to ESG. So in doing so, we accept a slightly diminished rate of return. We are here for the long term. These funds are essentially something to be safeguarded in perpetuity. A few years ago, we did advance more funds into the investment portfolio, and really that 200,000 plus is something now that we just realized some more substantial returns. So we really kind of just had a big gain on the further investment that we made a couple of years ago, and now we're just pulling that big gain back out because we've got a need for it. So I don't think we're really looking to change our risk tolerance at all. I think that's the same. If you're gonna have a discussion, it would be with Mike in terms of how much, what your ratio looks like next April or May, whenever he meets with us, and where you're guiding him in terms of investing in terms of ESG or US equities or whatever. But you wouldn't do that without him here. And it's a big picture thing. So I think at the end of the day, we are happy with the balance as it is. It's just slightly overperforming GICs. It might slightly underperform, but interest rates could jump back up again next summer. There's a lot of volatility out there. So that's why I think the risk tolerance is fine as it is right now. And I'm happy with our position. So that's the motion.
Thank you. Can't remember what I was gonna say. No, sorry, just before we jump on. No, it had to do with, the board had had some questions too about the cost of management of the fund, and it is quite reasonable. Like when we were at 1.7 million, it was a blended rate of 0.88%. As we edge closer to $1 million, it's increased because the first million is 1%. Yeah. So it'll be closer to 1%, but that's still well below what you would normally expect for a managed fund. And the only way to get away from that would be to move to something like fixed asset class or sitting in a bank account. But quite honestly, we paid about $16,000 in management fees this year, and we made about $180,000 or $190,000 in returns. So yes, it cost us money, but I think we did quite well on it.
I like the motion on the floor, but I'm also getting the sense that I think it would be helpful, to Jen's point, to have more information whenever it's appropriate in the workflow for the year, whether that's when we get the annual report or whether that's when we're getting other business related reports or asset management related feedback, to just cross-reference some of that to say, are we sure that we're forecasting out with these changes what we're going to need on 5, 10, or like 70 years when we need another new building to incorporate hovercraft technology.
Okay. Want to synthesize that?
Are you seconding?
I second the motion. But and I don't know if this would need to be a separate motion again, or if this is just a request of staff to take what we've heard for discussion and bring that back in conversations about business asset management and investment plans. I would be surprised if that would need a formal motion, or if that's just can we have more detail about this at a subsequent time?
Well, I think I heard three things in there, really. This motion, Valerie, would read here right now, and I'm gonna say for member Greg's, whereas the board of directors directed staff to move $500,000 from GSA's investment portfolio to GSA's high interest savings account, and whereas the board of directors directed staff to investigate moving more funds, that the board of directors decided to leave the remaining funds in the existing portfolios, as well as direct a staff report to study asset management to make sure those portfolio would cover said requirements, as well as bring forth a risk tolerance opportunity during, first quarter next year to look at, to revisit the risk tolerance, before moving forward with, reinvesting. Am I close?
I don't think before reinvesting, because we're not reinvesting, right? Like we're leaving.
No, sorry, I shouldn't say, yeah, not reinvesting, but to reinvest, not
Before recalibrating.
re-examine our risk tolerance.
I'll just say I won't accept the amendment. And in a nutshell, the reasoning is there's items being tethered to the investment portfolio that should be speaking to the operational budget, and they're two entirely different discussions. So
Okay, so we'll leave it that the board of directors, to start with, agrees to leave the existing funds in the existing investments. And the second for that, John, all in favor? Carried.
We have to check in with Kathy.
Kathy, yes or no, Kathy? Thank you. Do we want to make an official motion, or we just want to request a staff report that the asset management report be presented to the board when possible, so that we can examine that versus the actual investments long-term?
Question through the chair to Tim. Do we have on the work plan for 2025, do we have reports that could incorporate already on the agenda that would, or work lists that would incorporate this information anyway?
Yeah, so we're constantly looking at our asset management plan. Allison and Morgan are actively going through that right now to recalibrate it. But so what it would also play into, and this is further to Member Shaw's comment, is one of the things we're looking at for 2025 too, is trying to see if we can set up a 3-year rolling budget. So that, you know, year 1 is the real deal, but years 2 and 3 are the best guess forecast that where we expect will be. And I think asset management planning would line well into that, so that we've got our 10-year rolling asset management plan, but we also want a 3-year period of a firmer understanding of where we'll be year to year. Now, the thing with asset management planning, and this is why obviously you do it over 10 years, is that you are going to have some years that are light, and you're going to have some years that are next year that are heavy, and it sort of balances out those flows. But short answer is yes, we are probably looking at that.
In that, through the chair, in that case, I don't think we need a specific motion.
So we're comfortable with the asset management aspect of it, then it comes back to the risk tolerance scenario, whether or not, how official we want to make a request to revisit our risk tolerance strategy on our existing investments.
I would suggest doing that when Mike comes and does next year's report.
Okay.
I think that would be the appropriate time to discuss that. Yeah.
And so logistically, Allison, would we want to have that information prepared before Mike comes, or would we want to allow the board to talk to Mike, ask the questions, and then do the survey right after that?
I think I would like to talk about, see what he suggests, because he has more experience with this type of.
So we will leave it with staff to have conversation with the advisor to gather that information for a board meeting in the future.
Okay.
All right, anything else?
Good meeting.
Seeing nothing, then I will call for adjournment at 2:23. Thank you, everyone.
Thank you.
Thank you.